Thanks for joining us on Bloomberg TV India. I'm Harsha Subramaniam and you're watching Market Guru. My guest today is Raamdeo Agrawal from Motilal Oswal. Raamdeo, many thanks for joining us on Bloomberg. My first question to you, how do you think the markets are positioned from now to the elections? Now that the vote on account is behind us, what do you think are the key triggers going forward?
Yeah, so I think more than the vote on account, I think your earnings season is just about over.
Right.
So that's at least in my mind, it's a very, very important activity. And we have gone through some healthy numbers, and actually growth has been better than what we thought. So earnings are now, I think, irrespective of whatever is the political situation, I think it looks that corporate earnings are stabilizing and actually picking up.
Sure.
So that's a very, very big
positive sign,
a very positive sign. So that will set the what you call what the market should be doing sectorally, company wise, as well as aggregate markets. I mean, you cannot, with the kind of earnings we are expecting, this 1325 now for March for Sensex. With 1300 plus kind of earnings, is very unlikely that whatever be the political outcome, that you can compress the market for a very long time in a very meaningful way.
Right.
So very unlikely that market, so downside of the market is very clearly arrested.
Right.
One, because of the good corporate earnings and stable corporate earnings, and the corporate earnings outlook is also looking to be better. Now on top of it, you have a very polarized possibility of polarized political mandate, which is going to happen in say 2 months time.
Right.
So what is going to be the political mandate? I mean, that of course opinion polls, and one after other they will start building up opinion. But I think that is going to be the very big event.
Let's talk about what could be, do you think, the best possible poll outcome from a market standpoint? The people that we've been talking to, one gets the sense that, earlier you saw the resurgence of the BJP, the rise of the AAP made a lot of people nervous. Do you believe that the concerns are now getting allayed? How do you read the situation?
See, 2 months is a very long time in Indian politics now. You know that disruptive politics is there. In the sense that we saw in Delhi, no polls got it right, and so the disconnect between the analysts like us and actually the groundswell, the feeling for Aam Aadmi Party, particularly in Delhi and all, is you cannot actually really figure out what's going to happen when the ballot boxes are opened. So 2 months are a long period. I hope that we get a very, very polarized, good mandate, in the sense that whosoever comes with 300 seats, and so he doesn't have to do this so-called power politics of asking for favor to do anything small in the center. So I think we need a very decisive leadership, and if that were to happen, which is the probability of that happening is more than 50% right now. And as the market gets a sense that the probability is increasing from 55 to 60 to 65 as the closer date of polling comes, I think markets will start firming up.
You're saying a stable government is perhaps more suited than a fractured mandate?
Any day. I mean, market, at least right now, if we don't get a good mandate, I think market is likely to go down, I would say. In fact, market is pricing in a reasonably stable government,
Sure.
So if this the third front job is to be, keep putting up their flags every time they need they get an opportunity to talk about, because there's this 20-30 of them, and somebody or other has to, kind of raise the flag. So this possibility keeps coming up, and if we are so destined as a nation, we'll go through that also. One has to. It's the history of nation. It gets built over a period of time. I can have an opinion that I need a polarized mandate, but if the people of India, they're not united yet, and they still don't think that polarized mandate is a good thing and fragmented mandate is a good thing.
So that's even a possibility.
Yeah.
Let's talk about capital flows. We did see $20 billion come in last year. Early part of this year, some outflows happened both in equities and on bond side. What's the sense that you're getting in the context of tapering having begun?
One of the sense I get is that a lot of people who want to put a lot of money in India, provided we put our act together. We put our act together, we get our investment cycle right, we get our policy, this so-called decision-making process, which is, for nothing can be resolved, for sure. Say that tax issues or I mean, we are in all kinds of confusion. As a nation, we just can't take decisions and move forward.
That's holding back money, you're
That's
saying?
clearly holding back money, because none of the infrastructure project can come. Power, I mean, any of the controversies happen. I mean, in a country like this, there will be problems, but it has to be resolved time-wise and in a definitive way. So we are not seeing that kind of a regime where you ask some question and it gets resolved one way or other very quickly. So if we get to that kind of situation, that is the hope. I'm saying hope that may come and you get a damn good government and everything starts falling in place.
Then you're seeing increased capital flows.
Huge can be. It can be very, very large capital flows despite tapering and all. I mean, there could be a gap of 6 months here and there, but the potential over a period of time to get attract capital into India is very, very large.
Brings me to the next question about, we're talking in a time when inflation continues to be at elevated levels. Companies are pretty much factored in higher cost of capital through the course of the year. You're not going to get rate cuts. Where does that leave the currency? A large part of the conversation last year, I remember you were talking about the currency crisis, the current account deficit. Do you think for the new government that comes in, that the current account deficit and rupee is not so much of a headache?
Yeah. So, one or two events which have shaped up, economic policies, or it will shape up economic policies, is one of the very important things which happened in last 12 months, is this currency crisis. Now, we were almost on the brink of touching 68, 70, and I think this government lost a lot of credibility because of the way the entire current account deficit and economic management went out of hand completely, and currency went for free fall. So clearly they don't want to repeat that, and hence they've got the best guy possible in the world to take care of the monetary policy here. So that's one fantastic achievement of this government, to put Rajan into the seat. And he knows his job, and I think he has done a wonderful job. Since he has come, currency is already stabilized. He has already said that he is going to look at CPI, and that to more like 5%, 6% kind of thing. I don't know whether he is able to achieve that dream, but if that were to happen in next 1 or 2 years, I think we are going to see a lot of consequent thing happening, because of with the low inflation. We have not actually seen any sustained low inflationary situation, except for few years in 2003-04 at about 5%. We have not seen CPI at about 5% in last 25-30 years.
Sure.
So it has been very inflationary, more like double digits,
Sure.
8, 10, 12, 15 has been the order.
Sure.
Right now we are going to 9-10%. So if he is talking about 5.5% kind of a targeted CPI, and hence you got to have the fiscal guy, finance minister, also responding to that particular need.
So you're in a good place.
I think irrespective of the government, even if it is third front, you are going to get that thing going right, because nobody wants to mess around with the rupee dollar parity in a serious way.
You would think the rupee would be in this range?
I would think so. I mean, if the current account deficit has come down to more like less than $50 billion, less than 2.5% of GDP, and then now the only thing is to manage the second deficit, that is your current account deficit, and then address the growth.
Sure.
So I think that front, even this budget, Mr. Chidambaram numbers, despite there might be some issues here and there, but I think given the situation, it was quite
right.
There's some method in the madness, irrespective of everything. So my sense is that I'm not that much worried about the rupee dollar at this juncture.
I'm going to take a break on that note. When we come back, we're going to be talking about sectors to watch out for in 2014. You're watching Market Guru on Bloomberg TV India. Welcome back. You're watching Market Guru on Bloomberg TV India. I'm in conversation with Raamdeo Agrawal of Motilal Oswal. Raamdeo, we were talking about the currency. Some sectors that benefited the most from the currency were IT and pharma. Some of these stocks have run up quite significantly. Would you still buy?
Yeah. I mean, see, these are sectors which are not dependent on so much on the Indian economy. In fact, they are thriving on the weakness of the Indian economy, because the currency has remained very weak, and that is one of the leg which has helped them, apart from the global recovery and demand for superior Indian products all over the world. So that story continues, and I think if you see which is your largest market cap in Indian bourses, say TCS.
TCS, yeah.
And by far it is large, like it is almost 5 lakh crores.
So if I just interrupt you there, even if you look at the IT space, companies like Infosys, TCS, HCL Tech have all run 50, 60, 70% in the last 1 year. You're saying there's still juice left?
Yes, because they're still priced at index or below index. I mean, today Infosys is priced at about what, 17, 18 times?
Yeah.
So, and even TCS is priced 21, 22 times. So, I don't think it is absolutely out of reach or anything like that. Growth is there.
And this is all irrespective of currency?
Yes, I mean, no, they are talking about dollar growth of more than 15%. At NASSCOM level, they are saying that we'll grow at 15%. We have done, see, to reach $100 billion export, we have taken 15 years or 20 years or 25 years. We started seriously from 95, 97. It has taken, say, almost full 15 years to reach $100 billion. But how many years it is going to take to reach go from 100 to 200 billion?
Right.
You know, I mean, maybe 6 years, maybe 7 years. So, you know, now the best time for Indian IT is coming in. You know, because now we have the scale and we are absolutely in the forefront of global competition.
Would you say that about the smaller IT names as well?
No, in fact, unfortunately, unless they are very specialist in their field, but in the software services part of it, I think clearly
stick to the bigger names.
Yeah, the big and actually the biggest. You know, I mean those who are good at what they do, because deeper you go into the water, the larger deals. I think the competition is less and the bargaining power is more for the guys who are there, and they are able to adapt, or any change in one particular segment can be taken care of by the diversification of their own product portfolio.
Would you hold a similar view for pharmaceuticals?
Yeah, pharmaceutical is also almost in the same kind of boat, and the opportunity size is very large, and in fact it's a much more product oriented, whereas here this is much more service oriented, where your labor cost to sales, I mean employee cost to sales is almost 50% in IT, whereas in pharma it is much more intellectually driven, the process engineering and those kind of things.
Right.
So employee cost is only 15-17% of the sales. So clearly these are two different businesses, though the client, you know, the revenue is in dollars, but the value proposition is very different.
What would be your top pick in the pharma space?
Let's not get into the names, but you know, I mean, say all these big winners like say Sun Pharma or say Lupin, and then you have Cadila, Reddy's. So all these are the big ones, and they are doing very well, and they have very clearly laid out, and they were guiding also for 15-20% growth for next 3 years, 4 years, and all. So I don't see any reason why.
So IT and pharma are something that you like, but let's talk about the underdogs, the sectors that didn't do well this year, infrastructure, power, and so on. Do you see them reviving post the new government coming into place?
Yeah, that's the hope. I mean, that clearly is the hope, and something will, I mean, a lot of people are holding back now, and as a nation, investment cycle has to start, and clearly post election it will start. So what is going to be the next theme? Clearly the new government will have new agenda. There will be some dramatic changes also could be there in regulations and all, and some new opportunities can come up. So apart from traditional sectors like say banking, specialized financials, NBFCs, then you have consumer pack, which are almost kind of the best piece of Indian equities.
Correct.
Except that they are a little expensive, but they always remain, you know, kind of an area of opportunity wherever you get reasonable price. So businesses will be there from domestic side also, where you can on a bottoms up basis.
So you're saying that you remain relatively optimistic that the infrastructure power space earnings might perhaps revive from here on.
Yes, I mean one has to see how things change. I mean I'm not a great believer in any of this infra story, even earlier when things were booming.
Sure.
But I think the story has to revive.
What about banks? You said banks and FMCG are something that you conventionally can be relied on the growth. Yeah. But banks have been facing the problems of NPLs, and we've been talking about this consistently, Raamdeo. Do you believe that once the economy turns around, some of those problems are likely to subside? Would you say an investor should look at the Indian banks?
Yes. I mean clearly when these are cyclicals, and when cycles hit the bottom, everything looks to be wrong. You know, like. I mean, every time it looks to be far more serious than last time, and you always wish, why the hell I have this stock in my portfolio, kind of. but it's a cyclical, you know, I mean, it has to show true color at the bottom of the cycle, which they are doing. And at times we don't like the color, but that's how it is. And when revival comes, then we tend to forget again, you know, what were the problems. It's not that public sector banks didn't have problems in late 90s or beginning of this last decade.
The cycle has just come back, you would think.
Yeah, it has just come back. And
but would you have a preference between private sector and public sector banks?
clearly, I mean, private sector, well-run private sector banks, now they have been very reasonably priced. I mean, like HDFC Bank is probably trading at the lowest P multiples in the history of its listing. So you have an opportunity to buy very high quality names at very reasonable prices. So I think those who don't want to take a you know, kind of a chance of what happens, I mean, to suffer in the hands of PSU banks, you can still invest into high quality private sector banks in India.
Consumption, FMCG, would you consider still expensive?
They are expensive, selected. I mean, because growth is slowing down, and today the P multiples are not correcting. They are heightened at about 35, 40. So clearly you will not lose money, but what money you will make is going to be far inferior, and your holding period has to be very long. So maybe the return in next one year or maybe even 2 years could be muted, and then of course if you are much longer you know, tenure holder, clearly I mean, those stocks will give you reasonably good return.
One final question, Raamdeo. You know, Sensex is trading at about 13.5 times 12-year forward earnings. What's your own sense of how we are likely to end this year? What kind of targets that you have in mind?
See, I know one thing. See, I'm more worried about the downside than the upside. We can take any amount of upside, and upside is dependent on many things. I mean, many local things, many global things, how the corporates behave, how the interest rates behave, and how the foreigners behave finally. You know, so there are so many factors which, but the downside is dependent on, you know, how the corporates are doing and how corporates are likely to do.
So what would that downside be? I mean,
Yeah, so downside is the corporate earnings, and we have about reasonably good what we call forecast across the industries for the next 12 months. And there it looks that, I mean, they are saying that actually this performance, I mean, for this quarter, Sensex earnings have grown at upwards of 20%. And Nifty earnings have grown at about 16-17%. So clearly there is and a lot of it has been contributed by exporters and thanks to currency depreciation and all. But global economy has been stronger. Now Europe is also recovering. So we are seeing that the trend which has come up in terms of export-oriented companies, they will contribute even more to the earnings growth. And next year we are looking at clearly 1500 plus minus 10-20, 1500 rupees kind of EPS. So having 12.5, as you said, 12.5 forward P multiple, that gives me a lot of confidence that at least I cannot lose money. So that's the first starting point for investing. Then how much can you make? I mean, the past history is that we have been making at about 15-16% at index level. So there is no reason for me to believe that in next 3 to 4 years, we will not get one opportunity where we will double our money as a portfolio level. So I would think that there is a high probability, very high probability, that in next 3 years or 4 years, you will double your money from here if you pick a portfolio of high quality stocks.
Raamdeo Agrawal, pleasure talking to you. Many thanks for joining us on Bloomberg. Thank you so much indeed. If you have been, thank you so much for watching.